Hello, and welcome to Freddie Mac Connect panel, Understanding and Navigating the Condo Market. All lines are in listen-only mode. This session is being recorded and will be available following the. If you have any questions, please use the Q&A icon at the bottom of your screen. If you have any technical issues, please also use the Q&A box as well, and someone will assist you. Lastly, using the handouts icon, you'll find links to speaker bios and the presentation deck. With that, I will turn it over to Jacques Kelly. Jacques, the floor is yours.
Thanks, Cindy. Hi, everyone. Thank you so much for joining us today, and welcome to this session. I'm Jacques Kelly from the Credit Risk Policy Team, and I'll be moderating today's session. In this session, we'll focus on condos. Condos are an important segment to serving Freddie Mac's mission. First-time homebuyers and low and moderate income borrowers make up a significant share of our condo loan purchases. With me today are Jackie Doty, Director of Condo and Co-op Policy and Innovation, Angie Hagelson, and Joel McMahon, both of whom are business leads for the Collateral Risk Policy Group. All three of them, in conjunction, are responsible for developing and managing our single-family condo and co-op policies, and they work with our technology team on innovations for Condo Project Advisor, which ultimately makes condo lending easier for you. So today, we'll be taking a deeper dive into concerns we're seeing in the condo projects. Our experts will share concrete examples and will walk us through recent policy changes. We'll also be sharing a recent enhancement to our Condo Project Advisor. So let's jump right in. So Jackie, Freddie Mac announced new requirements in July of this year that pertain to the physical and financial condition of condo and co-op projects. So before we talk about the broad policy changes, can you give us a little background about why Freddie Mac made these policy changes?
Good question. Thanks, Jack. Let me set the stage with the Champlain Towers example. On June 24th of 2021, Champlain Towers South in Surfside, Florida collapsed. It shattered the lives of the unit owners and caused the deaths of 98 people. This was a building that was a 12-story beachfront condo that had years and years of deferred maintenance and structural issues that the condo board struggled to fund and remediate. Saltwater corrosion, long-term water damage, and initial construction defects were among the contributing factors to this truly tragic event. But to answer your question, Jacques, I want our attendees to know that we didn't change our policy based on this one tragic event. Unfortunately, the adverse conditions that led to the collapse in Surfside aren't uncommon at all. The risks of residential buildings with aging infrastructure and in need of critical repairs just became more apparent from this incident. The same concerns have continued since this collapse, including reports of projects with structural challenges that in some cases led to immediate evacuations and eventual project condemnations. As a result, we initially published temporary guidelines in 2021 for projects in need of critical repairs. And then in July of this year, we introduced requirements into our seller servicer guide that superseded and replaced the temporary requirements to help lenders in identifying condo projects in need of critical repair and for underwriting projects with special assessments. With these policy changes, our goal is to promote sustainable homeownership. These policy changes will help to ensure that all condo buyers can achieve and maintain long-term sustainable homeownership. And we want to work closely with our sellers to create a more sustainable future for all owners and renters in condo and co-op projects.
Great. Thanks for that backdrop, Jackie. Are we seeing the issues of projects in need of critical repairs in certain parts of the country or certain types of buildings?
No, actually, what we're seeing is the same situations like this all over the country for different sizes of projects, both new and established. It's not isolated to just large towers or coastal areas. We've encountered small and mid-sized buildings and even newer buildings that need critical repairs. Long-term water intrusion is a common culprit for the deterioration of concrete and steel, but there's other causes as well. Many of the projects are older. Some have a history of not putting enough money in reserves for their current and future needs, along with a failure to address maintenance issues when they first emerge. The problem is, by the time a project is 20 or 30 years old, if it hasn't been properly maintained, the unit owners could be facing a list of costly critical repairs that can run into the millions per project or more than tens of thousands per unit.
Great. Thanks, Jackie. So, Angie, let's talk about the policy update itself. You worked extensively on the policy. Why did these changes go into effect?
Well, both Fannie Mae and Freddie Mac, under the guidance of our regulator, issued industry announcements on July 5th, 2023, to incorporate the temporary guidance from 2021 on deferred maintenance, critical repairs, and special assessments into our respective selling policies. These requirements went into effect for loan applications taken on or after September 18th this year. We worked together with Fannie Mae to ensure alignment between our new policies to create greater certainty for lenders, homeowners and homebuyers, homeowner associations, and others in the industry.
Okay, that makes sense. What are the requirements for projects that need repairs?
Well, we continue to prohibit the sale of condo loans and co-op share loans in projects that are in need of critical repairs. All critical repairs must be complete and the issues remediated before loan securing units in the project are sold to Freddie Mac. By critical repairs, we mean repairs and replacements that significantly impact the safety, soundness, structural integrity, or habitability of the project's buildings, and or that impact unit values, financial viability, or marketability of the project. Now, these include material deficiencies, which, if left uncorrected, have the potential to result in or contribute to critical element or system failure within 1 year. Any mold, water intrusions, or potentially damaging leaks to the project's buildings that have not been repaired, advanced physical deterioration, any project that failed to pass state, county, or other jurisdictional mandatory inspections and or certification specific to structural soundness, safety, and habitability, or any unfunded repairs costing more than $10,000 per unit that should be undertaken within the next 12 months. Now, this does not include repairs made by the unit owner or repairs funded through a special assessment. By unfunded, we mean the HOA does not have the funds in place to pay for the repairs and must postpone the remediation.
Okay, thanks, Angie. What are some examples of critical repairs?
Well, some examples are mold, water intrusion, or potentially damaging leaks, advanced physical deterioration of load-bearing structures, failure of roof, unsafe balconies, foundation, or parking structure issues. If left uncorrected, these could result in critical element or system failure. We've also seen critical repairs needed to seawalls, elevators, waterproofing, stairwells, balconies, foundations, electrical systems, parking structures, and other load-bearing structures, to name a few. It's also important to know that if damage or deferred maintenance is isolated to one or just a few units and doesn't affect the overall safety, soundness, structural integrity, or habitability of the improvements, then the critical repairs project eligibility requirement does not apply.
Okay, but projects are always going to need repairs, correct? What if the project is just making minor routine repairs? Are those okay?
Excellent question. Routine repairs are acceptable. These are repairs that are, one, preventative in nature or part of normal capital replacements, focused on keeping the project fully functioning and serviceable, and two, accomplished within the project's normal operating budget or through special assessments that are within guidelines.
Okay, thanks, Angie. Can you provide us with some examples of routine repairs?
Sure, routine repairs are planned maintenance in item areas that do not impact safety or habitability of the project, such as replacing a roof that is expected to last only 3 more years, updating plumbing or electrical components, updating windows, common areas, floors, carpet and lights, among others. A delay in these type of repairs would not result in critical element or system failure.
Gotcha. Thanks, Angie. Those are very helpful examples of critical repairs and routine repairs. What else can you tell us about the new policy?
Well, we are also prohibiting a sale of condo loans and co-op share loans in projects with current evacuation orders due to unsafe conditions. For example, we recently saw a project that had to be evacuated with residents given just, a few hours to leave after an engineer's structural inspection of the property, which showed excessive deflection in a concrete beam in the garage. And to help uncover potential critical repairs, we've added a new requirement asking lenders to review any structural or mechanical inspection reports that have been completed within 3 years of the project review date.
Thanks, Angie. So you covered physical condition requirements. What are the new requirements concerning financial condition?
Well, we have new requirements for special assessments. Special assessments aren't always a bad thing. Sometimes special assessments are for improvements, such as building new recreational facilities or to boost reserves to put the project on a better financial path for the future. But they can also signal that the project is in need of critical repairs, has significant deferred maintenance, or some other issue that has not been adequately budgeted or reserved. We are asking lenders to obtain information about all special assessments in the project so they can determine why the project is issuing special assessments and whether those assessments point to a more critical item that needs attention and may cause the project to be ineligible. We are also asking that lenders understand the amount of the special assessment, repayment terms and history to help determine the overall impact of the assessment on the project's financial sustainability. And when more than 15% of the unit owners are 60 or more days delinquent on a special assessment, the project is not eligible because there is concern that the unit owners are unable to meet their obligations to maintain the common elements. When a large portion of unit owners are not paying their special assessment, it puts the entire project at risk of financial and physical decline. In addition to evaluating special assessments, as I mentioned earlier, we are requiring lenders to determine if the project has unfunded repairs totaling more than $10,000 per unit. By unfunded repairs, we are referring to required repairs for which the association has not been able to raise enough funds to address either through regular assessments and reserves, special assessments, loans, or other means. These are projects that typically do not have the funds at their disposal to continue to maintain their buildings and amenities by addressing expensive needed repairs.
Okay, that makes sense. So Jackie, before we move on to our next topic, do you have any final comments about the new policy?
Sure. Angie did a great job explaining the requirements. I'd like to drive home the point that these conditions can happen in any project that fails to address critical repairs and significant deferred maintenance, or that fails to obtain timely inspections and implement remediation plans per jurisdictional requirements. These new requirements are geared to help promote sustainable homeownership for borrowers. They also help lenders identify when these conditions exist so they can work with their customers to address these problems so the borrower's homeownership journey is sustainable.
Great, thank you. Let's switch to Condo Project Advisor updates. So Joel, can you share the recent updates to our Condo Project Advisor offering that will make it easier for our lenders to identify projects that may be in need of critical repairs?
Absolutely. Freddie Mac made an exciting enhancement to Condo Project Advisor to help identify projects that may be in need of critical repairs. To provide some background, Freddie Mac introduced Condo Project Advisor Project Assessment Request, referred to as PAR, in October of 2022 as a risk assessment tool to assist lenders in underwriting established condo projects. It works like this. The lender looks up the project, and within seconds, the tool provides feedback statuses. There's green, which means the project passed all rules that Condo Project Advisor assesses, and the lender only remains responsible for the guide requirements that the tool does not assess. There's yellow, which means the project failed one or more of the rules that Condo Project Advisor assesses. Here, the lender remains responsible for the guide requirements that Condo Project Advisor does not assess and any issues identified by the tool. Then there's also incomplete. Condo Project Advisor is unable to assess, and the lender will remain responsible for the entire project review. When a project receives an incomplete status, lenders will begin seeing a new message for certain projects. To support lenders in identifying projects that may be in need of critical repairs, we updated Condo Project Advisor to return a new feedback message when a project may be in need of critical repairs. This message is based on a variety of sources, so when lenders receive this message, they should be extra careful in reviewing these projects for critical repairs. Keep in mind that even when you do not get the message, you are still required to determine if a project is in need of critical repairs.
That sounds great, Joel. What else is Freddie Mac doing with Condo Project Advisor to make it easier for our lenders to originate more condo loans?
We have a new status in Condo Project Advisor called Project Certified. When lenders receive a Project Certified status for a project, they can deliver loans in that project with minimal project underwriting. Lenders only have to review the project for compliance with the project eligibility requirements in our guide, which pertain to property insurance, title insurance, leasehold, and a few other items. Lenders are not required to review for critical repairs or budget requirements for condo projects with a project certified status. The project certified status may reduce costs for borrowers because lenders may not incur additional fees typically passed on to the borrower to obtain the condo documents for underwriting purposes. We do require these loans to be delivered with an IFI code, so it's important for lenders to get that IFI code implemented so they could take advantage of this new project certified status. We are very excited about these new enhancements to Condo Project Advisor. In the future, you can expect to see more options that will help you make more condo loans.
I agree. That sounds like a great tool enhancement. Where can lenders find out more about these changes?
We have a lot of resources on freddiemac.com that provide more insights and guidance about the condo policy changes that Angie talked about earlier, and training resources that highlight the benefits and ease of using Condo Project Advisor, including the latest enhancement. In fact, we have a brand new Condo Project Advisor training video readily available at the Resource Center within the Connect platform.
That sounds great, Joel. So Jackie, would you like to offer any closing comments?
Thanks, Jack. Yeah, I would just like to add that condo and co-op projects are a critical part of the nation's housing supply, and they can often provide an affordable home ownership option for buyers, including first-time and low to moderate income buyers. And that Freddie Mac is strongly committed to serving this segment of the market. As we focus on the future of lending and projects, we're going to continue to promote prudent risk management practices while supporting our lenders with our risk assessment tools like Condo Project Advisor. And together with our lenders, we can lower costs for home buyers and support affordable and sustainable housing in projects across the country.
Thanks, Jackie. We're now ready for some questions. If you have a question for our panel, please add them to the Q&A box. There are a few questions I want to ask our speakers. So the first question is to Jackie. Does the policy for critical repairs apply to all condos and co-op projects?
Thanks. That's a great question. No, it only applies to condo and co-op projects that have 5 or more attached units.
Great. Thank you, Jackie. Our next question is for Joel. Will Freddie Mac provide and maintain a list of known projects that do not meet these requirements?
Not at this time. However, the warning message in Condo Project Advisor may help you identify projects that may need critical repairs.
Thank you, Joel. Our next question, I'll tee this up for Angie. Is there a fee to use Condo Project Advisor and submit a waiver request?
There is no fee. It is entirely free.
Our next question is for Jackie. Does Condo Project Advisor provide waiver approval for one loan at a time or for the entire condo project?
Jacques, it's for one loan at a time.
Thanks, Jackie. Our next question is, and I'll tee these up for Joel, can I use the project certified status for all loans I originate in the project? And is there an expiry date for the certified status?
It is for one loan at a time in the project. The note date of the mortgage must be within 120 days of the issue date of the Condo Project Advisor feedback certificate.
Great. Thanks, Joel. So that's all of the questions we have time for today. Thank you for joining us. We hope this session provided you with a good understanding of the recent policy changes and what Freddie Mac is doing to make condo lending easier with our Condo Project Advisor tool. So Cindy, I'll hand it off to you. Thanks.
Thank you, Jacques and panel, and thank you to our attendees. If we did not get to your question, we'll reach out to you following the conference. Also, your feedback is important. Please take a few minutes to take our brief survey so that we can continue to bring you timely and relevant content. The presentation deck will be available following the session, and you can also log in anytime after the conference to play back this or any other session. Thank you very much and enjoy the rest of the conference.